What's up, everybody? Tyler here from Vant Trading with another 2021 market analysis, but this time it's on Bitcoin, where we think it's going and why. If by the end of this video you found it educational or informative or even entertaining, please hit that thumbs up or like button. And if you haven't already, make sure to hit that big red subscribe button on the screen and get notified for when we put out other awesome videos. So without further ado, let's dive on into it. What will determine Bitcoin's price? There's a couple things. I want to kind of just run through these and then go more in depth as we go on through the PowerPoint. First one is inflation. I don't want to get too deep into this because I have a slide next on inflation, but basically it's a relatively fixed asset. So at times when you're really printing dollars is when you're going to see this inflation hedge come into fruition, right? So we'll go over that in a second. Retail traders. Now, there's a ton of retail traders behind Bitcoin, long, short, whatever it is. Ultimately, the traders determine where Bitcoin is valued. And with inflation fears back after the financial crisis, it led to a spike in gold prices in 2011. Well, that was because of the inflation fears, like I mentioned. So now, since they're calling Bitcoin a new and improved gold, which means it's an inflation hedge, where do you think retail traders are going to go this year? Well, they're going to all pile in and add Bitcoin to their portfolio. Retail purchases, things like PayPal and Square, they're using it for purchases on their platform and giving Bitcoin and crypto in general a wider use to their market. Institutions, and this is one of the main reasons why we are big on Bitcoin right now. I have a couple slides on this later in the PowerPoint, but just to brush over it, I'm talking about universities, billionaires, hedge funds, banks, everybody that's invested in believing in Bitcoin this time. Digital currency establishment, right? Digital currency is going to be the future. Countries and banks are already starting to roll out digital currencies. China actually already started testing theirs. So we'll see where this goes to. I don't know if that'll really matter much this year, but it's definitely something to keep in mind going forward. And then last but not least, the decline in the dollar index. You trade Bitcoin, you can trade Bitcoin BTC versus USD. That's because Bitcoin is valued against the dollar, the US dollar. And if the dollar declines, Bitcoin's going to rise, right? They have an inverse relationship. So we're expecting a big down year for the dollar. And what does that mean? Big up year for Bitcoin. All right, so let's dive into inflation. Like I mentioned, Bitcoin, it is a fixed supply, right? There's a limited supply. You can't print more Bitcoin. It's capped at 21 million. So it's very similar to gold, where you can't just print gold. So that's why it's a good inflation hedge. It's also very attractive when the real yields head lower. So when bonds are not in demand, Bitcoin is really shining at that point. And then lastly, with an inflation heavy 2021, as we're expecting, gold is what we're expecting to remain flat, while Bitcoin is going to be on the rise and it's going to be the new gold. The reason we think gold is going to remain flat is if you know anything about the gold to silver ratio, right now it's still very high. And we're thinking with solar and EV that silver is going to be more attractive this year. And if that's the case, we expect silver to run a little bit. And I'll put a video out explaining silver later. But with that, we think gold will more or less remain steady because that gives silver a chance to catch up to the valuation of gold and bring that gold to silver ratio down. But that's not what we're here to talk about. So all in all, we think that Bitcoin is going to rise with the inflation hedge this year. Now, the main reason we think Bitcoin's here to stay, because as you know, back in 2018, Bitcoin did the same exact thing, soared, and then failed. Bitcoin's here to stay this time, and here's why. The institutional interest. This will be the main driver this year, right? So I'm going to brush through these. I don't want to spend too much time on it because I want to try to keep this to a shorter video. But JP Morgan sent its JPM coin. its digital currency live, right? So they're already starting to test it. Billionaire investor Stanley Druckenmiller, he owns Bitcoin. Mexican billionaire Ricardo Salinas Pliego says 10% of his liquid assets are invested in Bitcoin. Billionaire and hedge fund manager Ray Dalio says Bitcoin has a place in investors' portfolio. And the insurance firm Mass Mutual, purchased $100 million in Bitcoin. To continue, PayPal, like I mentioned before, is making Bitcoin more accessible to people and the public and allowing them to have a Bitcoin or crypto wallet on their platform. Square bought $50 million worth of Bitcoin and is now incorporating Bitcoin into their platform. Fidelity Investments, one of the world's largest asset managers, introduced their first Bitcoin mutual funds. Coinbase launched a cryptocurrency debit card under the Visa banner, so Visa sponsoring their cryptocurrency debit card. Billionaire investor Paul Tudor Jones says Bitcoin is still in the first inning, and he sees it as a better inflation play than the well-known Treasury inflation-protected securities, or TIPS, and gold, right? So that's something that we're saying as well, is Bitcoin is now the new inflation hedge, right? Ruffer, which is a UK asset management firm, they added $747 million worth of Bitcoin to its portfolio. So as you can see, there are some big whales, big investors, big banks that are investing into Bitcoin now. And that's why we think it's here to stay, because you weren't seeing everybody like this back in 2018. Now you're seeing a little bit more of a foundation to Bitcoin than just a cryptocurrency, right? A digital currency. And not to mention a couple universities, I think they were maybe Harvard and Yale. Don't quote me on that. You can look it up. They are using Bitcoin. They're investing in Bitcoin with their endowment funds, right? So that's big as well. What do some of the experts think? Mike Novogratz, he's a manager of a cryptocurrency hedge fund, thinks 65,000 is a realistic level for Bitcoin by the end of the year. Mike McGlone from Bloomberg, he expects Bitcoin to reach 50,000 by the end of 2021 and 170,000 in 2022. BlackRock, which is the world's largest asset manager, is investing in Bitcoin for both hedging and speculative purposes, says it's here to stay. Former Adaptive Capital partner Willy Woo calls 200,000 a conservative estimate for year-end 2021. Citigroup told its institutional clients that it sees the potential for Bitcoin prices to rise as high as 318,000 by the end of this year. And then Stock to Flow, which is a popular Bitcoin prediction model, says Bitcoin will reach 100,000 by the end of 2021. Now, some of these are outlandish, like Willy Woo and the Citigroup. Obviously, that's a very, very far-stretched estimate. I'm not saying it can't happen, but I think what we're seeing is the cryptocurrency hedge fund manager, Mike, and the guy from Bloomberg, they are pretty much more in line with what the realistic expectations can be. We are expecting Bitcoin pretty much where they're expecting, around 50 to 60,000 by the year's end is where we think Bitcoin will end up. And I'll show you a couple of charts in a couple slides from now. Now, I've talked about and ranted on about how great Bitcoin is and why it's going to go to the moon. But like everything else, it does come with a couple potential headwinds and things to note. First is regulation. Now, it is very, very unregulated right now, but as it starts becoming more popular and an actual digital currency and everything starts to come into fruition, then you'll probably see some more regulation come in, and they've already started talking about that. But I personally don't think that will come into the case this year. It's also easier for fraud and money laundering, as we've seen. Some big politicians bash Bitcoin because it's very easy to money launder. You can't trace payments. Yes, it's true, but I think that comes with the cost of digital currency. And I'm sure with some regulation as it comes and more popular, I think they will figure that out. I do want to note, typically we're like, well, if everybody's ready to short, well, it's going to go up, right? If everybody's ready to buy, it's going to go down. I do want to note the retail trader data does show an 83% of traders are net long. And the net long, the traders long to short ratio is 4.86 to 1. That is very, that's almost at an extreme level. It's pretty much in an extreme level of net longs. I don't know if that's really something that's going to matter right now. But you might see that, well, if this thing starts cratering a little bit, people will start piling out and getting out of their long positions. So it might bring down the number a little bit. That's something to keep in mind, that there could be some potential rocky roads. But we'll see with that. I'm not too worried about that. And then as you really have seen, I'm sure it's already really a euphoric market. So it could slow down, it could pull back, and it could just consolidate. So that's something to keep in mind as well. Let's show you a chart. This is our Bitcoin daily chart, and this is what we're looking at moving forward. So right now, as you can see on the daily chart, it's in breakout mode, right? It's breaking out above or outside of this wedge it's been in for a couple months now. And if we can see this daily chart close out of this range, I think you're good to see some more buyers momentum come into play. And really, I'm watching this level right here. If it breaks out and closes, I'd look for a retest to this level, maybe 34,000, and then a push up to 40,000 area. And I'll show you that on this next chart. This is the 4-hour chart for Bitcoin currently on February 2nd. Now, what I'm looking at is, and why I note I need this daily candle, which closes in 2 hours. I need it to close out of this range, because if you look a couple of days ago, it didn't close out. It faked them out and then went right back in. Well, I want to see it close out. And what I'm looking at, if it does, I want to see a maybe push up to this 37,000 range here. And then from there, what I'm expecting is a retest of that breakout level right here, and then for a continuation. Now, that breakout level, if you go back to the daily chart, is where I mentioned I like to see it come back and retest, which is this level, this area right in here, this 34,000 level. That on the daily chart and the 4-hour chart is where I want to see that pull back and retest after this breakout. And then I'm going to be a buyer, and I'm going to start piling in on my portfolio, because then I think that, well, if you look at the daily chart, you can really see that retest of 42,000. And looking back at the 4-hour, I think that this 40,000 level right here could be a really good level to watch. I don't think that Bitcoin from here moving forward is going to be more of a euphoric market like it has been, just because I think it's time for it to be trade more like a commodity, more like a normal currency or such. Like, I think it should really grind its way up, pull back, go retest 40,000. Maybe have a little bit of a sharper pullback, trade up. I don't think it's going to go straight up like it has been. I think it'll be more, it'll be traded normally. That's why I think that this will be more of a portfolio builder than a full-on day trader, because this can be a very volatile market, and it's something that if you day trade and it swings one way on you, you would have gotten hurt. If you're long right here, you would have gotten hurt bad here. So that's just something to keep in mind. I'm having, probably stops down in this area just to have a portfolio builder instead of a day trader. So that's what we're looking at moving forward on the charts. I do right now want to compare it to 2018 just to give you a chart version of it. Back in 2018, you saw very, very similar price action, right? You saw this wedge right in here after that big move on Bitcoin. Where did it go after that wedge? Everybody knows Bitcoin dropped and went far down after that big euphoric move, right? Well, looking at the daily chart right now in 2021, typically, you have that same price action, this triangle wedge going on. Now, if it was the same, it would be pushing down and then creating lower, lower price action, right? Lower market structure. But it's currently breaking out to the upside. And that's one of the things with the fundamentals of Bitcoin now is we think it's here to stay. With all this institutional investment and the fundamentals now backing it, new inflation hedge. It's just a lot more is going on right now into Bitcoin pricing than there was in 2018, the big pump, right? There's a lot more backing Bitcoin right now. So that's why we think it's here to stay. So let's sum it all up real quick. Bitcoin, I think, is in for some wild volatility and swings. Like I mentioned, Bitcoin, it can trade pretty aggressively and pretty nastily. That's why, I'm suggesting that you have some larger stops as a portfolio builder than day trading and trying to catch some big moves, because it can really hurt you. So keep in mind, it is very volatile to trade. Overall, like I mentioned, look for that breakout of that wedge on the daily, the pullback, the retest, the breakout, and then look for it to just go from there, right? I'm not saying it's going to go straight up, but I'm saying I think it'll grind its way up and end up at 50 to 60,000 by the end of the year. And if you take a look, it was very similar, very similar price action in 2018. But like I mentioned, very different fundamentals backing Bitcoin this time. It's here to stay. You got some big players backing it, whether you like it or not. This is the future. So I see Bitcoin as it's here to stay this time, right? And in order for it to be fully comparable to gold and reach that same net worth, market cap, Bitcoin has to reach 50,000. And that's why we're looking for a 50 to 60,000 target, because if people are going to start comparing it to gold like they have been, an inflation hedge, like it's a new and improved gold, well, it needs to walk the walk instead of just talking the talk, and it really needs to go hit that same market cap and market value that gold has. It needs to hit 50,000 in order to get that. So that's what we're looking for in gold or Bitcoin. So if you have any questions or concerns or comments about what our analysis, something we mentioned in the PowerPoint, just reach out, comment on the video, let us know. So if you like the video, please leave it, give it a like, give it a thumbs up on the screen right there. And if you haven't already, subscribe to our channel, because you'll get notifications with great videos like this coming out very often. So I hope you have a great rest of your day, rest of your new year, and safe trading.